We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in Bitcoin and cryptocurrency technical on-chain and fundamental analysis. And in today's episode, we've got to talk about a very important bottoming formation that may be taking place on your favorite cryptocurrency, which is Bitcoin right now. At the very moment, Bitcoin is rallying and has been over the last 24 to 48 hours after it bounced off of a very important level of support. If you remember the last week's streaming cycles, we talked about a couple of different formations that Bitcoin could walk through. We talked about how Bitcoin could either, one, break bullish out of an ascending triangle pattern and start breaking up towards $28,545, which is our next major price target here in the beginning of this bull market that we may be starting right now. Or Bitcoin, on the other hand, could go through and break down and look for support at a couple of different key levels. Now we have seen that break down on Bitcoin, and today we're going to talk about what exactly that means and whether or not Bitcoin has found the bottom after that collapse began. Quite a lot of updates taking place over the weekend on the chart, and we're going to dive into all of them here on your favorite and the #1 technical analysis stream in all of crypto. We do at least about a half an hour of technical analysis every single day here on the stream, and then we're also going to be talking about how a new Cold War may be starting. Yeah, you don't hear that every day. Well, actually, a lot of times you do hear that every day, but this time it's not just the naysayers and the doomsday makers. It is kind of reality. There's a few geopolitical realities that we're going to go after today as well. And we're going to talk about the consensus of what's going on around the world and how that may impact not only markets, but your entire life and the continuation thereof. Quite a bit of very profound statements made over the weekend that we're going to discuss coming out of none other than Russian President Vladimir Putin. But that'll come after our technical analysis because I know that's what you guys came here for. Let's go ahead and read some chat. Let's get some hashtag FinSolves in chat today, guys. It's an exciting time. We got Bitcoin potentially going into a new bull market. We've got summertime coming around, which as much as I love winter in Florida because it gets down to like 60 degrees. Yes, I know. That's what a winter is like in Florida. It'll get down maybe into the 50s or 60s during the midday. I'm actually kind of looking forward to the summer, but also a couple of other exciting things. Bitcoin's probably going into a bull market in the next 6 to 8 months. Might take longer than that. We'll see. We'll analyze that today. But if you guys don't remember, Club DeFi's here. It's finally launched, and it is launched in its permanent configuration. Done. We're done switching platforms. We're done with all this subscription model stuff. All of that's gone. That's in the past. What is going on now and forevermore for at least many years until, maybe it grows in the future and we change some things. But for many, many years, unless we add a subscription model on in the future, after there's like 15 or 20 courses, for the foreseeable future, for many years to come, Club DeFi is here in its current model. And the cool thing is we've used this model before. We're using the exact same model that we did with CT2A. It is a one-time payment model where you can get access to all the information that you need so that you can learn how to do the technical analysis that we're going to do in this stream. If you don't believe yet, the technical analysis is one of the most important, potent ways of measuring the weather, if you will, I like to call it, in cryptocurrency. Then you're going to learn today that it is, and you're going to see through the technical analysis that we do that is actually very, very important to your understanding of the market and your ability to actually profit and generate income in this market that you can live off of or you can build as a retirement fund. Whatever it is that you're doing, technical analysis is integral to that journey. And if you want to learn more about technical analysis, you can check out Club DeFi's Principles of Technical Analysis with the link in the description box down below. You guys have started joining it, and it seems like you guys are loving it. But let's go ahead and read some green names. We'll jump on to CoinMarketCap here in just a second. Looks like Rocket Metal News was first said, "Hey Jebb, what's up, Rocket Metal News? Good to see you. You are a very faithful and loyal member of our stream chat. You're here almost every single day. Normally, you're one of the people that's first. Thank you so much for your continued support, my friend." Grand Roofing Incorporated has been a member for a long time as well. Another one of you guys that are here almost every single day. Thank you. You guys really make this channel what it is. CBD Suddy in chat said, "Good morning, Jebb." What's up, CBD Suddy? Good to see you, my friend. Good morning to you too. Mike Lowry in chat, Dr. Fuzzy Eyeball, Sean O'Brien, Dan Nolan, Jeremy Shorter. Shout out to all of you guys. Hey, Jen, happy Monday. Let's make some gains. Well, hello to Jen, whoever that may be. Oh, Jebb, okay. Hi, Crypto Manny Bear. Hello. We've got Brandon Sandoval. Good morning. Green names in chat said hashtag FinSolve. What's up, man? Hashtag FinSolve. If you guys don't know, financial sovereignty, that's what I want you guys to have. That is the concept of you having complete and total control and access over all of your funds so that you have your money working for you and not the other way around. I don't want you being a slave to a paycheck. I want you to have funds to do whatever it is that God has called you to do. God has called me to preach the gospel and teach cryptocurrency, and I want to make sure that I have my funds in a place where I can do that while also taking care of my family. That's what financial sovereignty means in my life. What does it mean in your life? Tell me in the chat. When People's in chat said, good morning and God bless all. Hashtag FinSolve for the win. Absolutely. Grand Roofing said, dumping down rain today, sitting in the truck in a parking to work, but going to enjoy the stream. Awesome. Good deal. We got Mike Lowry in chat. The philosopher in chat said, hey, morning, and God bless you all. God bless you as well. Charles Dietrich, let me see if I can pronounce your name correctly. Charles Dietrich, I think I got that right, said, is CT2A going to be getting any updates? No, it is not. CT2A is an antiquated product. You can't even buy it anymore. For any of you guys that have CT2A and bought CT2A, as promised, you have lifetime access to it. You can find the links down below. Use the last of the 3 links to get to your courses page where you should be able to find CT2A. It no longer is receiving updates. It's an antiquated product. It's done. I updated it for like 4 straight years. That's why we've gone and moved on to Club Defi, because that's really the area that we're going to just flesh out and build out for the next several years. For right now, I got it right. Awesome. Cool. For right now, Club Defi's principles of technical analysis is what we'll be receiving updates, but I have a different video project I'm working on this week. I'm not going to give you too many hints just yet, but that's going to be getting my attention this week. But I'm really, really excited for you guys to see all the different updates that are coming out. J Derp said, nice haircut, bro. Thank you. Looking fresh. Yeah, let's see. Wow, it sounds so weird not having my headphones on. Goodness, that doesn't happen very often. I don't know. How does it look? I don't know. I think it looks much better than what I had, for sure. You guys can tell me in the chat if you like the haircut that I got there. I definitely needed one. Thank you for the encouragement. All right, let's go ahead and jump on over to CoinMarketCap, where we will discuss the price of Bitcoin and Ethereum. Bitcoin and Ethereum, as you can see, are up over the last 24 hours. But down over the last 7 days. A lot of times when you see that take place, where 24 hours is green, but 7 days is red, that normally means that there's a downtrend and a counteracting bounce in action. And on the flip side, if you see the 7 day is green and the 24 hours red, that normally means there's a rally with a counteracting correction in mind. This is a form of technical analysis. What we see here, and we can even see that on the 7 day price action charts over here, Bitcoin has generally been in a downtrend for the last week. So too has Ethereum and the rest of the cryptocurrency markets. In doing so, we have seen quite a lot of market capitalization shed off of Bitcoin to the tune of nearly $50 billion. For anybody who thinks that crypto is dead, we have a random movement, and it moves the market $50 billion with the B dollars. Just to put that in perspective, that's about how much military aid the United States has sent to Ukraine in the largest land war on the continent in 75 years. That's about the value of how much aid has been sent to Ukraine. Maybe about 100. It's between 50 and 100, depending on how you measure it. By the United States, I mean, not by everyone in general. And that's how much Bitcoin moves in a week, just because it's going up and down with a little bit of volatility. That's how big of a market this is. So don't be fooled by anybody that thinks crypto is dead or dying. It's not. Anyway, being up 2.58% over the last 24 hours is a wonderful thing for Bitcoin, something that we definitely want to see continue. Now, a couple of important updates are taking place here in the top 10. One of them is that Binance is up, but not as much. There is an allegation going around that was posted on Forbes. I will find the article and show it to you here in a little while, that Binance was allegedly moving around $1.8 billion of funds that they were using to back their stable coins last year around the time that FTX was taking place. And essentially the allegation is that Binance is making some similar moves that FTX did pre-collapse. Now, before we even entertain the notion that Binance would collapse, let's just remember that Binance and FTX are their complete own companies with completely different methodologies of running their companies. They have completely different cultures. That being said, they do both exist in a very unregulated market, and they both were at the top of the industry, meaning that they could kind of make up the rules as they went. So, not sure what that article is about, but we will talk about that a little bit later as I find that and kind of show it to you, and we can dig into that. Now, another important update that's going on in the top 10 is Binance USD. You can see Binance USD is slowly sliding right back out of the top 10. It is sitting at $1. It's still pegged, but market capitalization is down to $10.7 billion. If you'll remember, we've been tracking the market cap chart here for the last couple of weeks, ever since the SEC hit Paxos and Paxos decided to stop minting new BUSD. So far, the market capitalization of Binance USD is down by over 1/3. It was sitting at $16 billion. Now it's sitting at almost as low as 10 billion. That's because there's no new cryptocurrency in this form being minted anymore. There's no new stablecoins for Binance USD being minted anymore. It is down well over 50% from its all-time high that it hit just after FTX imploded last year, around $23 billion. Quite a sad moment in history of crypto to watch one of the big stablecoins just kind of fade off into nothingness. We don't even get the satisfaction of seeing something explode, because as much as it sucks when like a Luna goes down or a USD or a UST goes down or when a FTX goes down, at least it's exciting. Like at least it's something to talk about, right? At least it's, wow, that was like, car crashes are horrible, but when you're driving down the road, you're like, man, what was that? It's horrible. I don't want car crashes, but I'm saying that you kind of just look. There's nothing to even look at on Binance. It's just dying. It's just sinking. It's just sad. I guess that's what I'm getting at. It's just sad. It's not even like Binance USD is getting like a funeral almost, of where everything blows up and then you get a week to just mourn it. There's not really even a mourning period. It's just kind of fading off into nothing. And when it does that, that's probably going to lead to another major development on Bitcoin, and that means that Solana is probably going to jump back into the top 10, because as BUSD slides off into infinity and beyond, Solana is going to more than likely continue to see some gains as it recovers from the FTX collapse, and when those two flipping, BUSD goes down, Solana goes up, Solana will be sitting in the top 10 again. So for all of my Sol fans out there, you will probably see your favorite cryptocurrency back in the top 10 within the next 2 weeks, should most things stay the same. Now, moving on over to our charts here, there's something very important that I want to show you on Bitcoin, and that is this candlestick right here. This candlestick. Boom! Check that out. For any of you guys who have gone through Club DeFi's Principles of Technical Analysis, you will know what that candlestick is. In fact, over here in Principles of Technical Analysis, we talk about it in our Hammer and Shooting Star video, the 20th video in Club DeFi's Principles of Technical Analysis. There's 62 videos in here. In the 20th video, we talk about hammer formation. That's what this is. You can see that this is a formation where we have a very small candle body, then we have a very long lower wick, and then the market reversed. This is a bottoming pattern, and for any of you guys who have gone through Principles of Technical Analysis, then you will have seen in that video an example that looks similar to this one. A hammer formation is oftentimes a very important reversal pattern, and that reversal pattern played out wonderfully and beautifully here. If you remember last week on Friday, we talked about, actually it was on Thursday, we talked about how these three candlesticks, all of them, were actually not very strong bearish candlesticks, and a lot of them look kind of like a reversal pattern. We have a hammer right here. We have two spinning tops right here. The spinning tops indicate indecision. The hammer actually indicates reversal to the upside, meaning that none of these three candlesticks were actually very strong in the bearish direction. Looking at this candlestick as well, this candlestick had a very long lower shadow, indicating that when the market moved to the downside quite extensively, the bulls were able to buy up this market very quickly, and then they were able to continue moving to the upside. But it's not only that. You look down on the 4-hour chart, and if you'll remember, there is a level that I have been just hammering into your brains over the last couple of weeks, and I'll just go ahead and set it up right here. It's $22,808. $22,808. That is the level that we set as resistance on the 13th of September, 2022. It is exactly $22,808. And looking on the daily chart, look at exactly where we bottomed. You guys sometimes are like, Jebb, why'd you make that the title? I made the title, Major Bitcoin Bottom Just In, but Huge Bitcoin Opportunity. Here's why. Because in the last 2 weeks, I've been telling you guys that if Bitcoin does not break above about $25,236, that would be the exact level we're looking for. If Bitcoin does not break above $25,236, then it will almost certainly go back to $22,808, and it will probably bounce there, although there is a smaller chance that it could go down to $21,500. That is exactly almost to the dollar where Bitcoin bottomed out. Looking down here on the hourly chart, you can see that depending on what chart you're on, we bottomed out at almost exactly $22,808. Here on the Bitstamp chart, we bottomed out at $22,775. Here on the Coinbase chart, we bottomed out ever so slightly lower at $22,718. Now, over here, we had a little bit of a flash crash, but that was more of an outlier. That doesn't show up on most of the other charts. You can see most of the charts we bottomed out exactly right there at $22,808. 808 and change, as you can see right there. Even on this chart, Bitfinex, we bottomed out exactly there, 22,808. Go ahead and switch that over to our blue for support that we use on our channel. And you can see that is the bottom that we had almost down to the dollar on the Bitfinex chart. Why is it so important? In fact, I think it is to the exact literal dollar on the Bitfinex chart. Oh, excuse me, it was $1 higher. We were $1 off, and we're talking about thousands of dollars on the Bitfinex chart. But why is that so important? Why is 22,808 so important? Well, let's go to a cleaner chart here, and let's remember briefly what these two markets represent. Bitcoin, what these three markets represent. Bitcoin and Ethereum have three major levels that they're looking at right now. One of them is here right around $21,460 to $21,500. It's this level that we set right before FTX collapsed just a couple of days before. Then we have $22,808. Let me just switch this while we're talking. We have $22,808, and that level is very significant because that represents the local high that we set on the 13th of September 2022. Then we have this resistance level up here at $25,236. We'll set that as red because we haven't broken it yet. That level represents the high that we set here on August the 13th, I believe it is. Might be August the 15th. August the 15th of last year, that being that major resistance level. These three levels are the ones that we're trying to fight through right now. You may have heard me speak on these levels multiple times in the last couple of weeks, and that's because they are some of the most important levels that Bitcoin can break through right now. When you take them as a range, 21.5 on the bottom, 25.25 on the top, this range is the range that Bitcoin is trying to break through so that it can go back into a bull market. Because if it breaks through these levels, then we end up rallying, and I'll show you why I'm going to put this level here. We end up rallying to this number, $28,545. That level is there because it represents this bottom right here on the 22nd of June, 2021, which is the absolute bottom of this pullback during the last bull market. That's our next major level of resistance if we break through this zone. But it's not just on Bitcoin that those levels show up. They also show up on Ethereum and the total cryptocurrency market capitalization charts. At the moment, Bitcoin, as a result of its correction, is still above two of them. As a result of the correction not being too severe, is still above two of them. However, if you look at Ethereum and at the total market cap charts, then neither of them are where you would like to see them. You can see that total cryptocurrency market capitalization charts, the total crypto market cap chart is sitting right above its level right here. But this level up here that's just above it, we're actually still below. Just go ahead and set that as red. You can see these three highs right over here, here, and here give us these three resistances. One of them is a support on total market cap. On Ethereum, all three of them are set up as resistance right now. And Bitcoin on this chart, two of them are set up as support because we have rallied quite extensively. That tells us a couple of important things. First and foremost, Bitcoin is in good standing. Bitcoin has rallied farther in respect to the previous highs that we saw in quarter 3 and quarter 4 of last year than Ethereum and the total market capitalization charts have. Why is that? Well, normally when Bitcoin and crypto is going into a new bull market, you're oftentimes going to see Bitcoin being the first to go through that major rally. You're normally going to see Bitcoin being the first to break through those resistance levels because as people invest into the cryptocurrency space, they oftentimes want to build a foundation of Bitcoin as the backbone of their investment portfolio, and that is a good idea. That is a very good thing. That's what we do when we're investing in Bitcoin and cryptocurrencies. We build a backbone in Bitcoin. You've heard plenty of other people talk about this. Put half into Bitcoin, play with the other half. Let the Bitcoin be the foundation, that underlying blue chip stock, if you will, with that analogy, that continues your portfolio if you have something happen to the altcoins that you're in. That normally means that in the bad times, in the bearish times, you're often going to see Bitcoin be the first to rally and the first to break local resistance. And then you're going to see Ethereum and the other cryptocurrencies try to catch up. That's kind of where we are right now. The question is that if Bitcoin can bounce over just the next couple of days, can that give enough confidence to the bulls that they're not only interested in buying more Bitcoin, but then they're also interested in buying more everything else, more Ethereum, more Solana, more Dogecoin, more XRP, more Chainlink, more Avalanche, whatever it may be. Are they interested in buying more Cardano, etc.? So that's where we are right now. Is Bitcoin in position to do that? Well, to answer that, we have to do one thing first. And that is, we have to figure out if this bottom is actually going to hold. Are we going to be able to actually maintain this bottom? Because if you'll remember, Bitcoin broke below this uptrending level of support. Depending on how exactly you want to draw it, I'll go ahead and just draw it right here. Bitcoin had an uptrending level of support, broke beneath it, and on the 4-hourly chart, it broke beneath it in quite spectacular fashion. In the span of just 4 days, we dropped $2,500, down 10% from $25,000 to $22,808, which was that level that we were talking about before. From that point, Bitcoin has bounced quite spectacularly as well. It has rallied $1,100 in a day and a half, up 5% in a day and a half. That is wonderful news. Now, the question becomes, can Bitcoin sustain this rally? Well, let's start on the daily chart, and let's look at one of our favorite technical indicators, that, of course, being Lux Algo. There's quite a lot to break down here, guys. And by the way, if you don't have Lux Algo, you are just, you're hands down just missing out. Lux Algo is absolutely incredible. It is my favorite technical indicator in all of technical analysis that I use. I've used hundreds of different kinds of technical and on-chain indicators in my 6 years of experience, almost coming up on 6 years in July, experience doing technical analysis in cryptocurrency markets. Lux Algo is by far and away my favorite because of all of the detail that it gives me and also how powerful the strategies that I use on it are. If you are not already a subscriber to Lux Algo, then you need to become one. Use the link in the description box down below. Go to luxalgo.com and use coupon code Jebb, J-E-B-B, for 20% off at checkout. You will be very glad you did. But nevertheless, let's look at Lux Algo and you can see why you should get it. Lux Algo historically gives us things called buy signals. And I'll show you some of the examples here. I'll just go ahead and clear my chart on the daily chart out here. Lux Algo gives us things called buy signals. You can see a lot of them showing up here. They're on the bottom naturally because they're telling us that we're going to go up and they're pointing up. These buy signals are very powerful, but on their own, they are useful but not perfectly confirming. What we need to do to confirm our Lux Algo buy signals is we need to go ahead and confirm them with Trend Catcher. If you go into your Lux Algo settings, come right here, press the gear, go to inputs, scroll down. You want this turned on. That's Trend Catcher. It may not be on when you originally turn it on. Make sure you have confirmation plus exits, and I turn signal sensitivity to 12 and the confirmation signals agility to 26, 12 and 26. These are my setups if you would like. You can see confirmation simple right here, signals mode confirmation plus that. I don't have any of the presets on, although there are a lot of them that are really, really, really powerful in here. Now, what we do is we simply look for a buy signal and then Trend Catcher to turn green. That's this line right here. When the line turns green, or if the line was already green and then a buy signal comes in afterwards, whichever one is later, we set a line. Let's go ahead and run that strategy just back in time, and we will find some of our buy signals. And then we'll go ahead and turn Trend Catcher Lux Algo off for just a second so that we can kind of analyze how powerful these buy signals are. Again, I just want to prove to you whether or not the indicator is actually valuable before we go ahead and apply it to our technical analysis. This is a good example of what I was talking about earlier. You can see Trend Catcher was already green, but then the buy signal came in. So we're going to put the line at the buy signal, not at the Trend Catcher turning green, because you need both of these to have the basic form of confirmation. There's more confirmation that we're going to do. We're going to go through it with a fine-tooth comb, but these are some of our buy signals over the last 3 years. Now, let's go ahead and turn off Trend Catcher. The Lux Algo just for a second so that we can look and see how powerful these buy signals are. All of these are confirmed buy signals according to Trend Catcher on Lux Algo. Let's look into the past here. Let's see what this market did after the buy signal came in here. Okay, so in 43 days, Bitcoin rallied 50%. We'll call that pretty solid. After this buy signal, it was confirmed at that date. We rallied 30% in 80 days. We'll call that pretty good. After this buy signal, we saw Bitcoin rally 265% in 81 days. Okay, we're 3 for 3. Looks pretty good. From here, we saw Bitcoin rally 57% in 17 days, or 73%, 75% in 70 days, however you want to measure that. From this confirmed buy signal, we saw Bitcoin rally 38% in 42 days. Looking pretty good. We're, what, 6 for 6 now, 5 for 5 now. Over here, we rallied 36% in 14 days, 40% in 36 days. Here is where we get to an area that we're going to weed this out with other technical analysis, but theoretically anyway, we still did see an 11% rally in 5 days. Here, we saw Bitcoin get confirmed somewhere in this block. We're going to call it probably right here in the top third, just because the trend catcher did confirm this about halfway through that candlestick. I remember that. You're looking at about 16% over 28 days, depending on how you measure that. It might not be as bullish, but it's still bullish. Then we get to our confirmed buy signal right over here. And you can see, depending on where you measure it from, you're looking at approximately 25 to 30% rally over the course of 34 days. Now, what we can also do here is we can go through and weed out some of these signals and get even more powerful signals. But as you can see, the last 9 times that we saw a buy signal confirm on the daily chart for Lux Algo, literally every single one of them led the market into an uptrend. You see why I love Lux Algo? That's a 100% hit rate. You don't get that very often in technical analysis, and we have not even run the rest of our technical analysis through each of these technical indicators. Looking back at our chart here, there's a few reasons why we wouldn't have used either one of these buy signals right here, and they come from Lux Algo themselves. As you can see, there's also another part of Lux Algo, which you can turn on right here, called the EQ cloud. You can see, turns off. We'll turn the EQ cloud back on. The EQ cloud is a part of Lux Algo, and we would have weeded out some of these signals via it. You can see the market didn't really manage to get too far into the EQ cloud. So we may have bought this signal, which actually that line needs to go back right here. We may have bought this buy signal somewhere in here after we crossed above and turned the EQ, the trend catcher green and everything. We may have bought somewhere in here, but when we started to see we were failing to get through the EQ cloud, especially when we fell out of the EQ cloud right around here and had this big red candlestick, we would have gotten out of it, especially if we saw this sell signal. So you would have ended up having green on this buy signal, about 11%, as we can see here. With this buy signal, I would have been a little bit more skeptical about it because we got on top of the EQ cloud, but then we fell right back below it. By about this time in here, we would have sold out of the buy that we went in on this buy signal, and we would have probably pocketed 6 or 7%, but we probably wouldn't have stayed in it for too long. There's different strategies that you can use there, but those are a few of them. Now, the rest of them are pretty solid because they ended up sending Bitcoin straight into the reversal zone on top, which means that the rest of the 7 other parts of the 9 were extremely bullish. Now, what we're seeing right now is something that on Lux Algo that we want to consider. Because if you remember, we looked at all of those, and the market generally rallied between 30 and 90%. We had a couple of outliers where we rallied 265%. That was during a different period in history, macroeconomically, and in the history of crypto. Bitcoin had just gone through a halving, and the pandemic was largely subsiding. People were starting to get used to it towards the second half of 2020, moving on into the beginning of 2021. And from there, we also saw a huge amount of quantitative easing. The Fed put about $5 trillion into the market through the form of mortgage-backed securities and treasuries. And so that caused a huge amount of liquidity to go into the space. Not only that, we also saw a massive amount of money printing going on in the form of stimulus that was being injected into the economy. So we had a much more easy dollar to get with 0% interest rates. We saw people buying houses left, right, and forward. We saw people taking their stimulus checks and putting it straight into cryptocurrency. I remember some people doing that. We saw the Paycheck Protection Program coming out, putting money into crypto. We saw Elon Musk get into crypto. We saw Michael Saylor of MicroStrategy get into cryptocurrency. So that was a bit of a different time. But the rest of these buy signals where we weren't in just such a, go crazy buy Bitcoin kind of mode, we generally saw about a 30 to 90% rally come into play. So that starts to beg the question today, have we reached the extent of what this buy signal is capable of? Have we rallied 33%, and is that too far? Have we actually gone a little bit too far and Bitcoin needs to cool off now? Well, that's an important question because over the weekend, a very important development took place on the daily chart. We saw trend catcher turn red for the first time in a very long time since last time we saw a trend catcher actually turn red was in April of last year. So it's been like 9 months since we saw trend catcher turn red. The question now becomes, will trend catcher stay red, and will trend catcher lead us to a sell signal that will give us a confirmed sell signal? Because if you look at the history of confirmed sell signals, they're even more potent than the buy signals. So if we see a confirmed sell signal, that's not going to spell out too well for Bitcoin and cryptocurrency. Well, the good news is Bitcoin is right now sitting above the EQ cloud, and historically, that being about a week and a half ago, 2 weeks ago, around Valentine's Day, Bitcoin did not manage to even come down and touch the top of the EQ cloud. Same thing right here. As of yet, anyway, we have not come down and even touched the EQ cloud for support. Instead, we bounced off of 22,808, and at the very moment, we are attempting to break above that trend catcher, which is sitting as resistance at $23,900. If Bitcoin can break through $23,900 and change and move through that to the upside, then a couple of major things will take place. Number one, that trend catcher will have a chance of turning green again, although for trend catcher to turn back green, we probably need to go to at least $25,000. However, being above the trend catcher and using it as support is very valuable as well. However, If we do briefly break above the trend catcher, a couple of other things take place. Number one, we could end up seeing a confirmed buy signal on the 4-hourly chart. Trend catcher turned red on the 4-hourly chart, which means that this sell signal was actually confirmed right here. The tricky thing is this sell signal on the 4-hourly chart came so little so late that it doesn't seem like it's actually going to mean a whole lot, just because the market has bottomed. This is where you want to use your analysis and really say, okay, there's a confirmed buy or sell signal, but we're going to weed it out as a result of other analysis. Either one, you could have said, okay, this sell signal, we broke through the bottom of the trend catcher. We're going to use that as our confirmation instead of the trend catcher, because we broke through the bottom of the EQ cloud. Or you could have completely weeded this out after we bounced off of 22,808 and then we saw the buy signal. Nevertheless, this sell signal was probably one of the weaker sell signals I've seen, although it was still definitely better than a lot of indicators that you'd run into. Anyway, if Bitcoin can break above about $24,500, it will do a few things. Number one, it'll break trend catcher on 4-hourly chart. Number two, it'll break trend catcher on daily chart. And number three, it'll break through the EQ cloud on the 4-hourly chart and potentially allow us to have a confirmed buy signal on the 4-hourly chart for Bitcoin through Lux Algo. On top of that, if we do briefly break up to at least 24 and a quarter, then Bitcoin could start putting into motion a right shoulder for an inverse head and shoulders pattern that could look something like this. This is another area that if you've been in Club DeFi's principles of technical analysis, you're going to really appreciate, because we talk about all kinds of patterns such as that over here in Club DeFi's principles of technical analysis. So make sure to check it out with the link in the description box down below. This inverse head and shoulders pattern would likely then, if we draw our shoulder line, I'm going to call it right around here. This is not a very clean inverse head and shoulders pattern, so I'm going to kind of just draw it as I can. But that would probably give us a price target of right about like this that would probably push us back up to at least $25,000 and change. On top of that, if Bitcoin is able to break through about 24 and a quarter, it'll also hopefully start to reverse the reversal zone, and then we could break up to and even possibly test and get into the top reversal zone if it drops down here to, let's just kind of extrapolate it here, like $24,500. If we break down here, get into this area and kind of move up into it, that's a very bullish territory. So if Bitcoin can even find the strength to get to $24,500, it would probably in that time run into the bottom of the reversal zone, indicating that we are in very bullish territory, because touching the bottom of the reversal zone that is on the bullish side, as we saw happen right here and right here, generally coincides with a huge explosive bullish movement on Bitcoin. On top of that, if you'll remember what we talked about over the last couple of days in that scenario I put forward of Bitcoin going through its correction, because that's clearly what we're playing out right now. We didn't break through 25 and a quarter. We instead went through the correction. If you'll remember when I laid out that scenario, I also talked about Elliott wave. I talked about how it's very possible that Elliott wave is simply playing out right now. We saw our first correction, now we're seeing our second, and from here we'll see our third leg to the upside. Elliott wave normally has 3 primary movements and then 2 secondary movements. So a bit of a teaching moment here. We also talk about this in Club DeFi, Principles of Technical Analysis, so make sure you go and check it out. Link in the description box down below. Go to cryptojebb.com. I'll show you in a second. With Elliott wave and with most markets, you normally observe something called a primary and a secondary wave, where a primary wave is the markets moving in the same direction as the general trend. So if you're in a bull market, moving up is part of the primary wave. If you're moving to the downside, that's part of the secondary wave. A secondary wave goes against the main trend. So if you are generally moving to the upside, let's call it either a rally or a bull market, then going to the downside is that secondary bearish movement. On the other hand, if you are in a predominantly bearish market, you're going through a bear market, or you're just going through a major correction or crash, and then you see a small movement to the upside, that's called a secondary bullish movement. And so right now, with our chart being primarily bullish in the form of potentially what is the beginning of a new bull market, we are seeing a couple of primary movements to the upside here. Then we've also seen a couple of secondary bearish movements to the downside here. What we may have seen on Saturday, February 25th, when we bottomed out at 22,808, that level we talked about over the last couple of weeks, we may have seen the end of this fourth leg to the downside and the beginning of this fifth leg to the upside. Now we kind of have to test that theory. Does Bitcoin have the strength to break through $25,236? And does it even have the strength to get there in the first place? That's really the question that we now have to answer. And I am happy to tell you that I think we might. But you might notice I don't have a lot of confidence in that. You might notice something feels a little bit off about that statement. So I'm going to paint the bullish scenario, the bearish scenario, using Lux Algo, using other technical indicators, and we'll try and come to at least an informed area where we can try and make an informed opinion on where Bitcoin will go. And I'd love to hear your thoughts in the chat as well, and then we'll read chat. Okay, let's start on the 1 hourly chart. What does Bitcoin look like? This is the way I like to start technical analysis. You just you give it the visual check. What does it look like? Does the market look bullish or does the market look bearish? You're probably thinking, wow, Jebb, that's some very powerful technical analysis you got there. Does it look bullish or bearish? Well, hang on a second. Before you throw me under the bus, technical analysis begins with perception and instinct. The way that you will become a master at technical analysis is through much experimentation and quite a lot of hours in front of a screen looking at the chart. I have thousands of hours in front of a screen looking at a chart, and I have an intuition about where the market goes. And a lot of times I'm a little bit, and this might be something you struggle with, a lot of times I'm a little bit scared because I'm like, I don't want it to be that way. Or I don't know if the technical indicators line up with that. But a lot of times when I have that kind of gut feeling, that intuition, and I don't listen to it, a lot of times I'm wrong. I had kind of that going on. I was like, I really just feel like something's going to cause Bitcoin not to break through 25,236, but I really wanted it to break through 25,236. And a lot of the technical indicators were saying it, but I just had this churning in my spirit that said, oh, it's just not going to happen. I'll get to what my spirit says in a second, but what my gut, I suppose my instinct says in a second. But for now, looking at the chart, does the chart look bullish or bearish? What does our visual analysis say? Just look at the chart. We have a level right here that is moving to the upside, but is it moving to the upside as quickly as the market moved to the downside? Not really. This is not a V bottom like this. This is more of kind of like a 90-degree angle where we're bouncing off with the same, exactly 90 degrees in opposite of where we were moving to the downside. So we were very bearish, and now we're kind of bullish. That's not something that gives me a whole lot of confidence. That's something that gives me a little bit of confidence that Bitcoin's going to have a hard time here. That's something that gives me confidence that the bears did not completely subside. If we look at the beginning of the last two rallies that we saw that. We saw just a massive explosion. Right now, we're not seeing that kind of thing take place. Now, that could happen, and I could be proved wrong because Bitcoin could just go through a meteoric rally. What we saw in these examples is Bitcoin went through this kind of little small rally that it started with, and then it took off like a rocket ship. If that takes place, then Bitcoin likely will go through an extreme rally. But if it doesn't, does the inclination of this uptrend indicate that the bears are indeed not as exceptionally bullish as not as exceptionally crushed as we thought they were? In short, if Bitcoin is only rallying this steeply, does that indicate that the bears are actually still in charge of the market, but they're just taking a breather? I'd think potentially. Now, that's kind of the visual on the market. The next thing to look at would be indicators. Let's look at Lux Algo on the hourly chart. On the hourly chart, we're under a buy signal. EQ cloud turned bullish. Trend catcher is green. That means we have confirmation, confirmed indicators and confirmation on all three of those indicators. And on top of that, the market is pushed up here to the bottom of the reversal zone. A little bit of a nitpick, but a little bit of a problem. Bitcoin has not broken through the bottom of the reversal zone. It has only moved up to the bottom of the reversal zone, and it hasn't managed to actually break into it. Not too happy about that. Although it is good that we have a confirmed buy signal, I'd like to see that continue over the next several hours. Speaking of the next several hours, let's look at four of them, the 4-hourly chart. Right now, Bitcoin has a buy signal. However, Bitcoin cannot even break above the resistance level of the bottom of the trend, of the bottom of the EQ cloud. It got up there and rejected from the bottom of it, meaning it couldn't even penetrate into the EQ cloud. On top of that, it could not even get to the other side of the EQ cloud naturally because it couldn't even get through into the EQ cloud. Also, we could not manage to break through the reversal zone, the trend catcher, to at least get us above the trend catcher, if not to see trend catcher turn green and give us confirmation. 4-hourly chart is still bearish, folks. 4-hourly chart is not giving us the signal of a primary uptrend starting. This is still looking like a secondary movement against a primary downtrend. What this looks like right now is not this. What this looks like right now is more like this. Okay? So I'm willing to be proved wrong, but Bitcoin is not in confirmed bullish territory yet. We cannot sit here on the 4-hourly chart and say Bitcoin is in exceptionally bullish territory because it just simply is not yet. This is still, on the 4-hourly chart anyway, a corrective movement against a primary downtrend. That primary downtrend taking place ever since the top here on February 21st, 2023. Now, you might be thinking, Jebb, wait a second. I thought this whole movement was potentially a corrective movement from a primary uptrend, depending on the time frame you're looking at. On the daily time frame, we are in a primary uptrend. On the 4-hourly time frame, we're actually in a primary downtrend. How do I define that? Lux algo. Very simple. That's where Lux algo plays into this. This is a corrective movement against a primary downtrend on the 4-hourly chart, and it is potentially a corrective movement against a primary uptrend on the daily chart. It's where you have to look at the market through a lot of nuance and realize things aren't always as they seem, and they're also different on different time frames. That's not a problem. That is not a contradiction. That is not a failure of logic. That is, in fact, the nuance of the analysis at play. So on the 4-hourly chart, the uptrend is not confirmed. On the daily chart, we are still in that primary uptrend market because we have a confirmed buy signal here, and trend catcher is green and the EQ cloud is green, and we're still sitting well above the EQ cloud. On the daily chart, we're sitting pretty. The question is, when does that come to an end? We have a trend catcher that is turned red. That should be an early warning sign to you that if Bitcoin starts moving farther down, if it drops below 22,808, if it drops down here into the center level of the EQ cloud, or if it drops down to 21.5 and we see a sell signal come into play, that's where you start having to ask yourself the question, is this uptrend no longer viable? Will Bitcoin at that point drop down to levels like $20,000? That is more in the cards right now than it has been in a very long time. Honestly, ever since when we were below $20,000. We are most likely to go to $20,000 right now than we have been at any of these points in time, other than maybe these 2 days right here where we saw a sell signal and we broke below the trend catcher. Other than this time right here, we're in the most danger of breaking down to this level as we have been in quite some time. But that is also where the opportunity lies. Because all Bitcoin needs to do to reverse that is Bitcoin needs to rally about $1,000 to the upside, which, as we've seen recently, is very much in the capability of the bulls. We need to rally about $1,000 to the upside. That'll put us at $24,500. That'll lead us to a confirmed buy signal on the 4-hourly chart, meaning that we are no longer in a downtrend, but that we have reversed the trend, and we are now back into a primary uptrend. That would help to give confidence to the daily chart bulls, and the bulls would say, okay, well, we're above that red trend catcher. We're sitting up at $24,500. We managed to set a much higher low, which indicates that we're probably going to test 25,236. All we got to do, folks, is we got to break through 25,236 and then go on a rally. If we set new local highs, great, we're off to the races up to 28.5. That's all contingent on whether or not Bitcoin can rally about $1,000 in the next 2 to 3 days. You know, baked into the word opportunity is not guarantee. Baked into the word opportunity is the word chance. There is a chance that something bullish could take place right now. There's not a guarantee. Opportunity does not imply that it's certain. Opportunity does not even necessarily imply that it's likely. Opportunity implies that it's possible. And it is possible right now that Bitcoin could break above $24,000, move up to $24,500, put some distance between itself and 22,808, go into an uptrend on the 4-hourly chart, and then prepare itself for takeoff above 25,236. There's a few hiccups with that, if you will. And there's also one little ace up its sleeve right now. One of the big hiccups is geopolitics. We'll talk about that in a second. The other big hiccup is that the effective federal funds rate ascension is slowing down, but it is still going up. We're likely to see in just a couple of days another 25 basis point rate hike. I believe that'll be in the beginning of March. When that occurs, great. It's 25 basis point rate hike. That's the same thing that we saw last time that we saw a rate hike, which indicates that the market is going to be having even more trouble getting liquidity. On top of that, the Fed is rolling off money off of its balance sheet exceptionally quickly, one of the fastest rates it's ever done in the history of the Fed. It's rolling off $100 billion, $97.5 billion worth of treasuries and mortgage-backed securities every single month, trying to completely shrink the $9 trillion, $8.5 trillion balance sheet to zero by May of 2026. That means that about $9 trillion, not no trillion, $9 trillion of liquidity is going to be removed from the economy, and that brings the air out of the balloon, and the balloon gets smaller. What's the balloon? The United States economy. You need to have some air in that balloon to invest in projects like Bitcoin and Ethereum and other cryptocurrencies. So the Fed shrinking the balance sheet basically means that $9 trillion they put into the mortgage-backed securities and the treasuries, They put that there, they're rolling it off the balance sheet, and that money's disappearing. It's non-existent anymore. That's how they're going to be trying to get inflation under control in a climatology sense rather than in a more weather sense, which is what the interest rate does. The interest rate affects things on a short-term basis based on overnight loans through the banking sector. The balance sheet really is the thing that drives the money market and the debt markets that impact the stock market and thus the cryptocurrency market. So that is a negative impact on crypto because why? Well, it makes money more expensive for the purposes of borrowing it. It makes it harder to come by for the purposes of finding liquidity, which makes it harder to invest in tech startups in general, but also in high-risk tech startups, which is what most of cryptocurrency is viewed as by the general economy. On top of that, it also means that the U.S. dollar's inflation is in general over the next 3 to 5 years going to be getting under control and staying under control, and the Fed will have high interest rates and low balance sheet levels that they can then reverse course on if inflation does get out of control, and then they can get it right back under control again. So not only will they be bringing inflation under control, they'll also have tools to bring the economy and inflation under control should they need, because they won't stay at those levels forever. That's a difficult market for Bitcoin to really thrive in. On top of that, the SEC has been coming hard for much of cryptocurrency, and of course, there are still a vast number of bankruptcies in play. Now, I also told you that there was a bit of a curveball. Here's that curveball. This is a very important one. Right now, there is something that is driving this rally that we're seeing on Bitcoin, which, by the way, is having a lot of trouble right now. There's something that is driving this rally, and it would be the Dixie and the SPY. As you can see, the Dixie is moving down, and the SPY is moving up. This, as of yet, is not a permanent trend. This, as of yet, on both of those markets, is a secondary trend. The reason we talk about primary and secondary is very important. To really build a market in Bitcoin, a lot of times you need to have the SPY going up and the Dixie going down. SPY, right now, bounced, but not very much. It bounced a little bit, and it's not looking bullish to me anyway here on Monday. We bounced, we opened at 399, and we've immediately started going down over the last hour and change that the market has been open. Not great territory, which means that this little bounce is very much a secondary trend against a very strong primary trend to the downside. That general trend to the downside is what we should be concerning ourselves with on Bitcoin. And if you'll notice, that general trend to the downside on SPY has coincided perfectly with this drop on Bitcoin. Now, on the other hand, we're looking at the Dixie. The Dixie has seen a small drop, but this is very much a secondary trend against a very strong primary trend to the upside. This is an extremely strong bullish trend on the Dixie, where the Dixie is climbing very fast. If the Dixie does have, for example, you can use Lux Algo here too, have a confirmed sell signal coming on the 4-hourly chart or hopefully on the daily chart, then that would indicate that the Dixie would end up going through a major correction. That would be something that could help Bitcoin quite substantially. If that doesn't occur, Bitcoin's going to have a very hard time going into a big rally when Dixie's already in a huge rally, as it is right now. You can see Lux Algo came in here and predicted Dixie almost perfectly. Check this out. We saw the trend catcher turn green. Right here, we saw the Dixie go up. If you were able to trade Dixie, which you can't, but if you're able to trade Dixie, or if you're a Forex trader, you can see that it rallied 2.24%. That's wonderful. Wunderbar. We saw a big rally on Dixie, at least for the people that are trading Dixie. Now, there is one potentiality that could come into play here. That is that Dixie maybe is touching the top of the EQ cloud here, and it's going to reverse off of it and start a new primary trend down. If it does that, that'll be bullish for Bitcoin. That alone could catapult the stock market and Bitcoin into rallies, breaking us above local resistance that we need to get through on both. But unless the Dixie does that, you're likely to see a continuation of the downtrend here on Bitcoin and a continuation of the downtrend here on the SPY. I, at this point, will just kind of put my cards out there. I think it's a little bit more likely that Bitcoin goes further to the downside. I know, I hate it. I'd like to say that Bitcoin's going to be able to hold 22,808. But there's a part of me that's thinking at this point that we very well may see a breakdown to somewhere in here on top of the EQ cloud to this uptrending level of support around $22,000. Unless Bitcoin can break up to at least above $24,000 and hold up there. If we can't do that, I got to be honest, I'm leaning more in a bearish direction. So that would be my take on the market and the why. Now, There's, of course, a lot more to this than what meets the eye on the charts. If you want to learn more, make sure you hit that subscribe button so you can be updated every single time we go live. We go live 10 a.m. Eastern every single weekday here on here for Coffee and Crypto on the Crypto Jebb YouTube channel. And also make sure to hit that like button if you haven't already. It really helps to support the channel. Thank you guys so much for everybody who's hit the like button. Let's just see how many likes do we have here. We've got we got 204 likes, 681 people watching live. Thank you guys so very much. All right, one of the other things I want to mention is that if you guys want to learn how to do all of the technical analysis that I just did, if you want to get proficient at TA, hopefully you understand why it's important that you're proficient in technical analysis. To predict where the market goes with any kind of certainty, you have to understand how the market works. You have to get some experience in the market, but most importantly, you have to learn about the market. I've been studying technical analysis nearly every single day for over 5 years now. And I still get it wrong sometimes. Technical analysis is not perfect. You're never going to predict things perfectly. You're going to be wrong sometimes, but you want the odds to be ever in your favor, as a famous movie quote once said. And I want you guys to have the odds in your favor. And the way you do that is by understanding the way that the market moves so that you can then understand how to trade the market. Because if you can say with 70% likelihood, Bitcoin's moving to the upside, it's going to go here. It's going to go up 4.72% to this level. Then you have a likelihood that you can then go and apply to your trade. You build your entire trade off of technical analysis. Or if there's a big fundamental news story that just broke or you know is about to break, then fair enough, you do that. But normally you're building your trades off of TA, and the fundamentals will inform the TA and that trade so that when you're making trades and investments, you know what to do. Technical analysis is the linchpin for all of that. To understand technical analysis, many people have said that the products that we make, our educational products, are hands down the very best in cryptocurrency. We've taught over 6,000 students how to do technical analysis and work in these cryptocurrency markets, and I want you to be one of them as well. So make sure you go down to cryptojebb.com. I will show it right here. And you can find all kinds of information about our YouTube channel, which is perfectly fine. If you just want to watch the YouTube channel, we got a lot of free content here. But if you really want to dig deep and you really want to learn about technical analysis so that you can go and do what I'm showing you on Bitcoin if I'm not live at one point and you want to see what's going on, or on Cardano because you're a Cardano investor, or on Solana because you want to see how long it's going to rally. If you want to learn how to work in this market, hands down, bar none, there is no competitor. Club DeFi is the place to do it. You can find the link in the description box down below to cryptojebb.com. Come right here to Club DeFi's Principles of Technical Analysis. These two courses, Principles of Trading and Principles of On-Chain, will be coming soon. But Club DeFi's Principles of Technical Analysis is here and it is ready. If you click on this button, you can read a little bit about myself and about my history, and you will find the course right here. There are 62 videos in here teaching you everything you need to know about technical analysis to hit the ground running and to really get a great start. We start with the very basics of understanding what a chart is, how a chart works, time frames, and then we talk about a lot of the psychological, the terminology. We talk about mass psychology. I love talking about the way that people think. It's very important to understand the way that people think in cryptocurrency, because if you understand the way people think, then you will understand the way they trade. And if you understand the way they trade, you will understand how they move the market through their trades. And if you understand how they can move the market through their trades, you'll understand where the market's going to move, and then you can take advantage of that. Very simply put, the way people think moves the way the market, affects the way the market moves. So if you understand the way people are thinking, then you'll understand the way the market's going to move. That's where the basis of FUD and FOMO comes from, as mass psychology is taught in that video. Support and resistance zones. We talk about wedges. We talk about all of our patterns, bull markets, bear markets. We talk about our candlesticks. Remember, we talked about the hammer formation. You can learn about that in this video right here. We talk about our moving averages. We also talk about a ton of different indicators down here. We talk about our VRVP. We talk about our 20 exponential moving average. We talk about a massive amount of different technical indicators and different concepts that you will need to apply to your technical analysis. We talk about convergence and divergence. That's very important. We talk about how, in those videos, about how different technical indicators come together to tell us the same thing. If 7 different technical indicators are telling you the same thing, that normally means something. If 2 different technical indicators are telling you the exact opposite thing, then that normally means something as well. It means indecision. You can learn about that in 51 and 52 right here. We also talk about how to use TradingView, how to use CoinMarketCap, how to use Coinbase and Coinbase Pro. We talk about market cycles. We talk about convergence of support and resistance and convergence of short and long-term trends. These are 2 of my favorite videos in the entire course. So make sure you check out Principles of Technical Analysis with the link in the description box down below and join thousands of students that are learning how to do technical analysis today. Make sure you check it out. And again, these 4 videos, the first 4 videos, are previews, and you can watch them completely for free just to get a taste of what Club DeFi's Principles of Technical Analysis is like. Go to cryptojebb.com and you will find more. All right, let's read some chat, and then I have a very quick little snippet. of geopolitics that we need to go over. But let's read chat. We've got a couple of member chats. Thank you guys so much for all of your support. Green Names, who's been a member for 8 months, said, "Hi, Jebb. You have seen that Solana has lost most of its TPS due to a software update on their chain." I did not see that, but I will look into that. I am not an investor in Solana, and typically if I'm not invested in a project, I don't talk about it on the channel. I don't look at it too much because I want to make sure I'm focused on the things I'm actually invested in, the things I'm actually teaching. I've never been a fan of Solana. I think it has a lot of problems on the infrastructure side. I think it's got a lot of problems with hacks, with downtime. Blockchains should never be hacked, and they should never have downtime, period. If that ever takes place, that is a huge problem for that blockchain. All right. Eye of the Beholder has been a member for 18 months, said there seems to be a lot more external negative variables at this time than pretty much at any previous time in Bitcoin's lifespan. That is exactly the case. That is exactly what I'm getting at. And that's what's making this hard for Bitcoin because, to be honest with you, Bitcoin, frankly, probably should already be at $28,500 if not for FTX's collapse. Ryan Guy 7890 said, this is Bitcoin's first recession. That's right. And that's what I'm talking about when I said in a video a while back that this bull market is going to be a little bit meaner than the previous ones. Let's see. 238 likes. Yes, now we've got 253. Thank you, guys. Is Heikinashi still looking bullish with this dump? Generally, the bottom of the bull market is still looking very bullish. Still looking very, very bullish. But Bitcoin on the shorter term time frames is starting to show a few signs of weakness. Jebb, are you going to talk about Dixie dropping? I did, so there we go. CBD Suddy in chat. What's up, my friend? Never listen to emotions when trading. TA all the way. Yes, as much as you can. Emotions are important, but don't let them inform your trading. You need to be driven by logic. It's not that there's anything wrong with emotion. You can feel emotion when Bitcoin's doing well or when it's not doing well. But you need to make sure that you're being very careful with that. Let's see. All right, guys. I have a little bit of let's see here. Yeah, I have a little bit of maybe I shouldn't say a little bit, a geopolitical story here for those of you guys that like to follow that is exceptionally important. So, back up, a little over a year ago, Russia declared war on Ukraine. They said that it was to put down Nazi resistance, which might get demonetized because I said that. Definitely don't condone that. To put down that kind of sentiment in Ukraine, which not really sure how anybody believed that because Zelensky's a Jew. But anyway, they declared war on Ukraine for that reason, for their special military operation. At this point, it's been going on long enough. There's been enough trouble back home and internal unrest that Putin really kind of had to lay his cards out on the table, and that's what he did recently as he came out on a interview that was recorded last Wednesday that went up yesterday on Sunday and more or less told the Russian people that the Ukrainian war is a fight for their existential survival and they can back down at absolutely no costs. Whew. We all really knew that that was the play because the problem is for Russia is undergoing a huge demographical disintegration, the likes of which has never been seen before in the history of mankind other than what's going on right now also in China. They're a rabid dog backed into a corner right now. And they realize that if they want to be able to maintain even just a modern functional state for the next 30 years, that for them to do that, they have to expand their borders out to at least the mountain ranges in the middle parts of Europe, which means that they would need to conquer all the way through the middle part of Poland, Ukraine, Moldova, some of Romania, the northern Baltics, all the way down to potentially the westernmost border of Turkey, and then also push down into Armenia and Georgia, which obviously, they've been fighting down there for quite some time to secure their European borders, essentially the their pre-Soviet borders. To do that, they have to go through Ukraine. They have to go through Moldova, neither of those being NATO members. Every other nation that's in the way is a NATO or European Union member at least. Putin and his autocratic friends did not want to let the world know that because then it would have just looked like that they were desperate, and that would not have been very good for their public image. That being said, they've had their hand forced because they realize that they're getting backed into a corner in Ukraine, and they could very well end up losing this war if they're not careful. That's where some of these quotes come in. This is what Putin told Russia One state television in an interview recorded on Wednesday but released on Sunday. They, NATO, have one goal: to disband the former Soviet Union and its fundamental part, the Russian Federation. This is not a stated goal of the West. In fact, the West denies this, but this is absolutely true, what Putin said. This is, in large part, the goal of every single military and strategic and geopolitical planner in all of the West right now, to absolutely drive a stake through the heart of the Russian Federation so that they will never be able to recover, because Russia has been a threat to Europe for 200 years or more. Nobody will admit that in the West. Putin won't admit that. None of them will. But the fact is, that is pretty accurate. Now, the NATO and West dismiss such a narrative, as it says right here. Putin went on to say a couple of other things that I believe are quoted in this article. If not, I can tell you. I remember what he said. Here we go. He said, I do not even know if such an ethnic group as the Russian people will be able to survive in the form in which it exists today. For anyone who's a student of history, you will recognize that is a very scary statement, because this is very reminiscent of the kinds of things that different fascist and communist leaders in the history of the world have stated. It's very reminiscent of what was stated during the beer hall push in the 1930s, when the let's just say new leadership took over Germany, and the empire fell apart, and it led on to what happened in the 40s, Second World War. That's very similar to what Putin is saying. The thing is that Putin's kind of right. The Russian ethnicity is dying out very quickly, and it does not have the replacement generation to replace it. Russia's ethnicity is potentially going... The ethnicities inside of Russia could potentially end up leading to a civil war, because there's growth in certain ethnicities in Russia, and there's shrinkage in the core Russian ethnicity, the Russian people's ethnicity, whatever. I mean, all of them are Russian people, I guess, but the core actual Russian ethnicity is shrinking. You have a huge amount of growth in the Caucasus region from some of the ethnicities down there. You end up running into this issue where the entire nation could fall apart on it. It could completely collapse on itself unless it can be unified around one thing. That, for any student of history, is the prime driver of autocracy, when there are fundamental either ethnic or religious or political divisions in a nation. Whenever an autocrat steps in to try and hold that nation together by any means possible, that normally leads to a dictatorship, which Russia already has, and it normally leads to warmongering and expansionism and colonialism. That's what Russia's trying to do. Putin laid his cards on the table and said, look, we are fighting for our very survival, because if we don't conquer all of Ukraine and push back Russia's borders, and Medvedev, which was the previous president before Putin for in between his terms and might become the president again in the future, about 15, 20 years younger than Putin, also said that Russia needs to push their borders to at least the middle part of Poland. Remember, that used to be the president of Russia, and if something ever happened to Putin, he's probably the guy that will replace Putin. Medvedev said that. So they've put their cards on the table. This is a war for the very survival of the Russian state and the Russian ethnicity. At least that's how Putin is framing it, and honestly, he's kind of right. That's a dangerous thing, because Russian nuclear doctrine says that they will only use nuclear weapons in the event of an existential threat to the state. He is priming this war as an existential threat to the state. He is, maybe I should say, how would I say here? He is framing this war as an existential battle for the future of the state, which is actually in a lot of ways true. That is one step closer to the beginning of a new Cold War. And if China does go forward and actually start allying itself with Russia, as the CIA has come out and said it seems like they are doing by potentially sending lethal aid very soon to Russia, then you have a lot of the Cold War planners' worst nightmare, because this never happened in the last Cold War. You have a Cold War where Russia and China are on the same team. You didn't have that last time. The United States managed to keep Russia and China enemies of each other, and they had very limited trade and military allegiance. This time, if Russia and China are on the same page, they're much weaker than they were during the 50s, 60s, 70s, and 80s, but they are still both massive nuclear powers. And together, China has the workforce, Russia has the raw resources. That would be a very powerful bloc. Not exactly the brightest of times ahead for the world if that does descend in that way. It is therefore paramount that war ends as quickly as possible and Russia loses badly if you want any kind of stability in the world, like we've seen in the last 30 years, ever since 1992 when the wall fell. Anyway, I'm over time a little bit, but I think as a citizen of planet Earth, it was important that you know a little bit about what's going on over there in Russia. All right. Let's see. Jebb is darn smart for his age and never seen NAM. Surprises me. And Iran and North Korea. Yeah, I don't know what you mean by NAM. You mean Vietnam? Vietnam? Is that what you're saying? Yeah, no, I wasn't around for it. I've studied it. All right. Russia just went for Black Sea's ports. If they got those cut off, they would have to sail around China or used to get to the Middle East. Yep. All right. Silent in chat as well. All right. Hi, good to see you, Silent. All right, guys. Well, I am a little over time. So if you guys did enjoy today's stream, I want you to do me a few things. Hit the like button. I really appreciate it. Let's get to 400 likes. Hit that subscribe button so you can be here every single day when we go live every single day here on every single weekday here on Coffee and Crypto Live on the Crypto Jebb YouTube channel. And also make sure to go ahead and get Club DeFi Principles of Technical Analysis. Use the link in the description box down below. And if you're a former CT2A member, you've got a 25% off coupon code waiting for you. Just shoot us an email, support@cryptojebb.com. We will give you access to that 25% off coupon, and you will be getting Principles of Technical Analysis for 25% off because you are CT2A alumni. We want to give a big thank you to everybody who joined our foray into the e-learning space, and we're just so very thankful that over 5,000 people went through CT2A. If you guys have not already, make sure to sign up for Club DeFi's Principles of Technical Analysis. Shoot us an email. We'll get you that coupon code. And also, if you're a former Club DeFi member, when Club DeFi was launched under the subscriptionary model, we've got a discount for you. Some people have already used them. However much you paid into Club DeFi, we're going to give you that much as a discount. One person, for example, paid $25 for 6 months, so we got $150 discount. He's already used it. Shout out to him. Won't say his name, but shout out to you, my friend. Welcome to Club DeFi. If you want to be just like him, make sure to join Club DeFi. And by the way, if you do join Club DeFi today, then you'll be able to be here for office hours at 8:30 to 9:15 p.m. this evening, because I am going to be going on office hours with everybody that's in Club DeFi. So make sure you sign up today so you can join me and ask me any questions and meet me in kind of like basically like a Zoom call. It's Demio, but it's like a little bit of a webinar where I teach you guys and I answer any of your questions. So make sure you sign up with the link down below. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling.